how would you contextualize where we are with the broader market right now and how much further we could potentially fall? Or are we finally nearing a bottom? Is it even possible to say?
Hi, Morgan. Good morning. Yeah, I think, as you said, it's sort of feeling like unprecedented times. We're making a lot of comparisons to 2008 and other, market drawdowns and crises, but things do feel a little bit different this time. I think, we're hitting lows as the news gets worse, and the news was also expected to get worse. We're hearing about, hotels and restaurants shutting down and the impact to corporations in the market. The market's on edge. There's a lot of fear. I think a lot, if not all of that, is probably, or near all of that, might be priced into the market by now. There, will probably be some potential consequences on the economy, certainly in the short term, potentially longer than we have thought. What I think is sort of missing and what the market needs is some sort of resolution in terms of containment in the U.S. and in Europe on the coronavirus. So this morning we heard that, Hubei finally reported that there are no new cases. That's the epicenter of the crisis. So if we take a step back and look at China and Korea and look at some notes, the data on the coronavirus there is on downtrend or potentially even stopping. And, we'll have to see how economic activity picks up and see if that's a, relevant model for us to look at. So I think, ECB, $820 billion of buying, Donald Trump, 850 million stimulus, 1.9 trillion globally. All of these things will help the market, but I think what we really need is stability in the coronavirus news.
Yeah, to the point you just made, I mean, you mentioned the ECB, and certainly we can look at some of the moves the Fed has made, drastic moves in recent days, as well as all of this fiscal stimulus and fiscal relief that's now making its way through the federal government here in the U.S. as well. A lot of use of the term bazookas, so-called bazookas being fired right now to help quell the pain on both Wall Street and Main Street. Yet the markets continue to sell off, and at times we get these new headlines and the sell-offs even accelerate. It's such a turnaround from this idea of, for example, don't fight the Fed. Why do you think some of these stimulus and government measures to help haven't been more positively received by the markets in the meantime?
I think that, what's happening is that we're getting, positive news about the support that we have from the Fed and global governments. But at the same time, the inverse news there is on what is going on with the virus, the amount of sick people, the potential spread, and, some of the criticism around the lack of plans and steps that we have here to contain and sort of what can get worse. If I just took a step back and look at the market, as someone who's not near the age of retirement, I can look at it and say, look, there's some incredible buying opportunities to buy on the dip. Look at some quality names that I've been wanting to get into. They've had
like what?
Epic pullbacks. I just think that, things that won't go away. So the growth in technology, semiconductors to help the growth in AI, 5G, Apple, Microsoft, basically all of these things that operate from, the China ecosystem into the U.S. and have really led the market up for the last decade really, but particularly the last year or so. I think that a lot of those names are on sale, but what happens is you have this volatility. So as an investor, it's really hard to look at your account and see, oh great, I got in and I'm up 5% today. I'm down 10% tomorrow. I'm up 5% today. So I do think that, a lot of investors are starting to look at things like, flight to safety and quality names and, even inverse funds as the market pulls back.